business mission trip for trading companies from Singapore. And incidentally, at that time, it was Madam Wong who said, Edison, since I'm going to be the Vietnam-Singapore ambassador, and since you're organizing a trip, can I join in? So that was how I got to know Ambassador Ho. Okay, my company is registered in Thanh Hóa province. So when I started my business in Thanh Hóa, even the government officials, the Vietnamese government officials asked me, why do you register your company in Thanh Hóa? But setting up a business in a foreign country is like buying a property, right? It's the property that calls you. It's not you select the property. Okay. In 2022, when I re-entered Vietnam, I realized that there was something happening in Vietnam. Okay, which if I don't do something about it for my own company, I might as well just call it quits. Okay. So in 2022, there was a very severe credit crunch in Vietnam. All right, and that made me think about what can I do. All right, because incidentally during that period, so much funds were actually flowing to Singapore. Okay, and I saw the opportunity and the potential, okay, to try and bring some of these funds into Vietnam. Okay, but that started on a journey of trying to understand how to bring funds from overseas into Vietnam and how to bring them out. Because if there are no clear strategies on bringing funds out of Vietnam, the funds will not come into Vietnam. Okay, because when I started to talk to fund managers, I hear negative opinions. All right, and in fact, at that time, Vietnam was ranked C+, okay, by some of the rating agencies, and that baffled me because when it comes to FDI, Vietnam is A. But how come when it comes to fund managers, Vietnam is C+? There is a discrepancy between FDI and fund management's opinion of investing in Vietnam. And that really made me very interested to want to understand. Okay? Now, there are a lot of investment opportunities in Vietnam because, in my opinion, I think Vietnam will be the green capital of ASEAN. It has to be, and it will be. Why? Because green transition, right, is a multi-decade decision by governments. And Vietnam has one of the most stable political systems, at least in my opinion, okay, other than Singapore. It's a single party, okay, and there are benefits of having a single political party economy, okay? And this is important because any transition, right, energy transition requires decades of planning and investments and investment recovery. Okay, so if the political system is not stable, I think investors will find it very challenging. Again, we are not talking about companies, we are not talking about just entrepreneurs, we are talking about funds. And funds always take long-term view. Okay? So today I would like to share an innovative financing model, okay, that I have seen evolving over the past 2 years. All right, and how my company is making our stake, right, to bring in funds into Vietnam, which is a very challenging market, I must say, okay, for fund managers. Okay, but I stake my confidence in Vietnam because I think Vietnam has very good and stable policies. All right, and if we are able to do that successfully, that means in and out, I think the floodgate for funds will be there. Okay. Now, I think as educators, there are a few skill sets that we have, and I think these are valuable skill sets. Number one, the skill set of learning. All right. Personally, for me, I've never been in the financial sector. I've spent 15 years of my life in education. All right, but the past 2 years, okay, when I decided to focus in managing funds, something must have happened in me. Something must have happened in me. Okay, and that is the role of money, okay, in the economy, especially during this confluence of geopolitical challenges. All right. Now, it put me on the path of rapid accelerated learning, okay, on managing and looking at fund flows. Okay, I'm not saying that my sharing is a complete financial worldview, okay, but I think my sharing can help to inspire some interesting conversations. Okay. Second, all right, I think the opportunities of ASEAN is very significant because there are a lot of funds in US, in the Western countries that are looking at growth economies, and the ASEAN growth story is really something that people are talking about. I think many of us do understand that. Okay, and as educators, actually we have another skill, and that's called facilitation skills. All right, it is not about brokering deals, but facilitating deals. Why do I say that? Many Vietnamese companies that have a lot of potential, international potential, are not exposed to the international financing mechanisms. It requires people to educate them, all right, on how to utilize some of these international financing systems, okay, and also to educate the Western fund managers how to understand the ASEAN context. Okay, all right. So these two skills are what adult educators can have. All right. Now, all right. Now let me share about the rapid rise of private credit. Now this private credit is a 2 trillion USD market, and it's increasing. Okay. And why this rapid rise? This is something that I'll share later on. But if you look at some of the recent news, okay, for example, Citibank is a world-class international bank, all right, and banks are also going into the private credit space, all right. Just a couple of weeks ago, they announced Citibank, okay, announced that they will partner Apollo, right, to develop a $25 billion private credit direct lending program. It is very strange, right? Why would banks, which have always been in the business of lending, okay, want to go into private credit? Temasek, okay, Singapore's own sovereign wealth funds, is also raising 1.3 billion in private credit. And all these are recent news. You can just Google them. Okay? Why this sudden rise of the private credit space? Okay. Now, in my opinion, I think the rapid rise of the private credit space is due to the confluence of 3 factors. Okay? And we can see it's really fast expanding. Okay? Number 1 is the high global interest rate. All of us know somewhere in 2021, 2022, US decided to increase their interest rates. And the interest rates are not high, but the pace of the increase was phenomenal. So much so that it caused certain banks to collapse. You know, like for example, the Silicon Valley Bank. Okay, because of the rapid increase of the interest rate, that bank collapsed. And that sparked, okay, a significant outflow of investments from startups. So from there, the startup ecosystem suffered their biggest, longest, deepest funding winter. Okay, and they are still in the winter space. Alright? So this high global interest rates have created significant challenges, okay, for many countries. Right? A lot of those who are in loans suddenly find themselves, hugely out of pocket, much more. Okay? But that has also created certain opportunities. Banks, if you look at banks, their earnings have been phenomenal as well. Okay? Now, the other key challenge is the geopolitical risks. Alright, you have the Russian-Ukraine war. Okay, you have the Middle East conflict that is fast evolving into a Middle East war. Okay, and then there are challenges that it might even spin out of control. Then you have the Korean, right, the North and South Korean conflict. Okay, and that is the war part of it. Then you have the trade part of it. Okay, the very, very challenging trade. I wouldn't say a war, but trade disputes between the West and the rest. Okay, the rest being sanctioned countries, China, sometimes India. Okay, so I think these are geopolitical risks that have actually created a very challenging environments for startups. So many startups have actually died, collapsed. Even big, well-known startups. Okay, and because of these risks, there is capital flight. Okay, from the equity market into the debt market. And this equity flight is really very significant. Okay, I was involved in a startup ecosystem for over the past 3 years. It has been very difficult to raise funds, equity funds for startups, even in Singapore. Okay, half of the VCs have disappeared or curtailed their investments. All right, and even if they are going to invest, valuation has halved. Okay, it is increasing now. Okay, but slow. All right, much of this capital has actually shifted to the debt because ultimately, whether is it VCs or PEs, private equity, their base investments come from individuals or corporates. Okay, and now a lot of these funds are actually shifting into the safer debt market. All right, because if companies were to collapse, okay, debt recovery is much easier than equity recovery. Okay, and then thirdly, I think there is a credit engine that is being created. All right, by none other than our Uncle Sam, right, the US. Okay, I will explain this. Private credit engine. Okay, it is a multi-trillion USD engine. All right, and I think this is none other due to the rapid de. Okay, for some of you who have been following global news, okay, you'll know that the USD is being challenged by the rest of the economies. Okay, you have the West, and of course you have Japan. And the rest being China, of course, Russia, right, the BRICS economy, India as well. In the past, oil has to be traded in USD, but now no longer so. Okay, the BRICS economies now numbering almost 50 countries. Okay, and in ASEAN, you also have a few like Indonesia. Okay, Indonesia is considering, Singapore has not, okay, to join the BRICS. Right? And this formation of the BRICS came about in terms of looking at using alternative to USD was because when Russia invaded Ukraine, US enforced sanctions, and one of the things they did was to bar Russia from using the SWIFT system. Okay, and many countries start to worry if it could happen to Russia. Could it happen to any other countries? You know, the SWIFT system is an international coded system, okay, where banks communicate with one another. And without that communication, you can never move the funds. All right, especially US denominated currencies. Okay. Now, this de-dollarization, okay, has seen USD as reserves decreasing. All right, and USD as global trading currency decreasing as well. Okay, so this is from JP Morgan, and they have tracked over the past 2 decades, right, how the de-dollarization has been happening, but the recent few years has been pretty rapid. Okay? So if people don't use USD, then they will start to use other currencies, including cryptocurrencies. Alright? So reserves, USD as reserve is decreasing. Now, if you are US government, okay, how do you respond to a de-dollarization of your currency? That was a question I asked myself for a number of months. It's very different from many other governments in the world. Alright? The US government do not have state-owned enterprises. Don't have. In Singapore, we have state-owned enterprises. That means enterprises that are owned or majority owned or majority funded by the government. China has many state-owned enterprises. Vietnam has some. Alright? But US don't have. US government don't own any businesses. They believe in free market. Alright? And now that is being challenged. Okay? Why do I say that? That to me is a geostrategic shift. Alright? Now, in my opinion, I think the great contestation between the US and the rest has to do with supply chain. The US government doesn't own supply chain. But through the power of the US dollar since Second World War, they have been able to influence the global supply chain. So the global supply chain is the supply chain that produces everything that US needs. The US government needs, and the US population needs. Now if you look at China, it's very different. Chinese government owns a lot of state-owned enterprises. Okay? And over the past 5 decades, right, industrialization of China has been successful in lifting more than 50% of the population out of poverty. Okay? Because the government has been able to coordinate that flow of funds from central bank into the supply chain to produce the things that they need. Now, in my opinion, I keep saying my opinion, it's because I have to be a little bit diplomatic here. Okay? In my opinion, I think this is the biggest challenge. Because that is why the West always accuse China of subsidizing. And they want to impose tariffs. Right? Because if you own the supply chain and you produce the money, of course you push the money into the supply chain, you can get a lot of things done in the direction that you want. That has been the power of China. But the US has been different. They produce the currency and they have to let the currency flow into the market. Okay? And the globalization was a strategy to influence the global supply chain. That's the US system, in my opinion. Now, these two big contests is going on, and US wants to impose tariffs because they say that is unfair market practices. Now, if you look at that, talking about friendshoring, nearshoring, okay? And what is this? This has to do with global supply chain. Okay? It is, in my opinion, not just about, because you are not friendly to the US. But I think the US government wants to bring the supply chain nearer and closer, for whatever reason, right? Okay? Now, my question is this, which is my own assessment and interpretation of the global situation now. Is, the building of global friendly supply chains, right, possible through massive structured project financing? Okay? And I think this is where I saw the opportunity. Okay? Now, if you are the US government and you print money, right? Okay? Another one called QE, like quantitative easing. It will be very risky if you just print money without creating the demand of the US currency. It will be very risky. And we have seen many economies collapsed due to hyperinflation because the government decided to print money. Okay, Zimbabwe was one of them. Okay, some of these South African countries. Okay, Nigeria as well. Okay, so governments cannot anyhow print money. Alright? But there is one way, and that is to create demand of your currency. But if you have de-dollarization, whereby demand of the currency decreases, then what do? Okay? And this is where I think the rise of the private credit system is a strategy by the US government to create demand of their USD by pushing out easier access credit. Easier access. Okay? Now, it is not cheap, but it's easier to access. Now, over the past 2 years, I've seen the rise, or the rapid rise of non-recourse loans. Now, if you walk to a bank, you need money and you walk to a bank, you want to take a loan to buy any property or whatever, as an individual or as a business, the bank immediately will ask you for collateral. Okay? Because the traditional banking system has risk management systems in place that are very stringent. If you want to borrow $1 million, they want you to have at least $1 million worth of collateral, okay, to back up your loan. If not, if you want to default, how are they going to recover? Okay, but now we are seeing a rise of massive non-recourse loans, whereby we can actually get access to millions, hundreds of millions, billions of loans without recourse. Okay, without collateral. But it doesn't mean that there is no collateral. It just means that the collateral takes a different form, and that is the project becomes the collateral. Okay. Now, these non-recourse loans are typically only available to very large companies with very long track record, with very good relationships with the banks. But now these are being made available to many companies. Okay. And the costs of bringing such loans, not much. Low origination. Okay? Now, what is also interesting is that, you see, there's only one entity in the world that can produce money, and that is the government. So when you see a lot of USD loans being made available, it's not because Anderson decided to open a printing press. That will be counterfeit money, right? Okay? It's because the USD is going to flush the market, but not from the supply side, from the demand side. Because if the government can give you a loan, okay, through various layers of structures, you take up the loan, you cannot operate on the loan document. You must convert the loan into currency. What currency? USD. Right? Because if it is US denominated loan. And most of the time, in Vietnam, you can't even use the USD at all. You have to convert it to Vietnamese dong. Same in Singapore, same in many other countries, except say maybe Cambodia. Right? Cambodia, you can use USD direct. The moment you convert it to the USD to Vietnamese dong, the USD go into the reserve. The country needs to have reserve, because when the money leave, central bank need to exchange. Okay? Now, it is interesting because when you have this mechanism, okay, it will naturally create demand for the USD. Alright? And I think this is the way the US government is trying to resupply, alright, the global market with a lot of USD denominated loans through bringing down the barrier of taking up these loans. Okay? As you can see, when it comes to money, there are two key players. One, the government, because they need to print the money. The banks, because only the banks can multiply money. Okay? With, let's say, a $10 deposit, the bank is allowed to times 10. Okay, through loans, and then push out the loan. Once they can push out the loan, and somebody else accepts the loan, you have money created. Future money made available now. Okay? Now, this kind of a structure is it's a legal system. It's part of the legal banking system. Okay, but how to get supply chains absorb these loans? This is where I think projects become important. Okay, now any companies with good projects that are long term, projects that are big, in the range of $50 million and above kind of project, they can easily access this kind of private credit system. Okay. Now, when I came to understand some of these mechanics, okay, I realized that so early part of this year, I decided to set up a completely different business, okay, to try and channel some of these funds from US, from Europe, okay, into this part of the world. All right, but then I need a proper structure, okay, which can actually bring in the funds. Okay, so I set up this M Capital project financing structure. Again, this is a structure that several fund management companies are using from Europe, from US. Okay, now what does it involve? Number one, it all starts with a project, because a project gives a reason, okay, for using the funds. When you go to a bank and you want to borrow, the bank will ask you, what do you want to borrow the funds for? There has to be a reason. You cannot say, I want to borrow $1 million because I want to keep in the bank. That is not a reason. Okay? You want to borrow $1 million because you want to build a house. That is a reason. Okay? Alright? So the project is a reason. And Vietnam has many good projects, especially in power, social housing, industrial parks, alright, green power, green energy, okay, infrastructure, so on and so forth, that are long term. Okay? Then number two, you see, it must start with a project, and then it must be supported with two very key stake players. Okay, stake players are one, the private ultra high net worth investors. These could be individuals, these could be corporates. Okay, but these are entities with a lot of clean money. There are a lot of money that are not clean. Only clean money can participate in this times 10 times 100 process. Clean money. What is clean money? Okay, clean money means money, of course there are many requirements, but some key requirements are money that pay tax. Okay, when I say tax, means government tax, airport tax is also government tax. So there are a lot of businesses that want to move money by carrying in suitcases. That one is not clean, because never pay airport tax. Okay? Alright, that kind of money cannot participate. So there are a lot of money that are limited clean money. Okay, and there are investors who recognize this and they make their money available for this multiplication. Alright? Number two, we need project endorsers. Entities, government entities that says, okay, these are projects that we want to do, we endorse. Alright, so some of these project endorsers are the World Bank Group. Okay, it could be the Securities Exchange of the country. Alright, so there are various mechanisms. Now, having these two come together becomes very interesting, because then comes the third key stake player, and that is the top tier investment banks. We are not talking about local banks, we are talking about top tier investment banks like JP Morgan Chase, Barclays, HSBC London, alright, where they have trading desks, okay, trading platforms where they trade bank instruments. Okay, and for them to trade bank instruments, they need the clean base capital. Alright, and that is where the ultra rich investors come in with their clean base capital to allow the traders to trade huge flow of debt instruments, which I believe is being fed into the system by the US government. Okay, alright. Now, then they are able to multiply the money, because these are investment banks. Okay, and then pass out the money through asset management companies and loans. All right. So what I do is in Singapore, I have access to some of these funders, and before the money comes in, we incorporate special SPVs in Singapore, all right, and we bring in the funds and deploy the funds in approved worthy projects in various countries. So Vietnam is one of them, Philippines, Indonesia, Malaysia, Cambodia as well. Okay? Alright, so as you can see, it is not a simple process as just walking into a bank to get a loan. Alright, in the private credit space, there are various stakeholders. Now, all these things banks have been doing at the back end. Okay, but banks are being regulated. Right, so that's why you don't be surprised. Citibank say, okay, I want to set up my private credit line. Okay, I want to set up my private credit space. Why? Because the private credit space is less regulated. Okay, but to multiply the money, okay, even the private credit providers need to work with banks because only the banks have the power to multiply money. Okay, and so this kind of a structured financing system is available. Okay, not only for my company but a few other overseas funds. Okay, and so what it means is that everything starts with project. Good projects. Okay, projects that have ESG compliance. That means number one, environmental. Okay, of course, now it's not just ESG but EESG, creates economic value, all right, contribute to social, and be part of the government system. Okay, why? Because the funds don't just come in, the funds need to go out, right? Because these are not free money, these are money from somewhere else in the future deployed now. Okay? Now, this EESG compliance is important because it creates strong reasons for the investors and for the project endorsers to support the project and for the investment banks, okay, to create the future money now and then deploy them. All right? Now, as part of my work with some of these fund creators and fund managers, I realized, and also talking to businesses in Vietnam and different countries, I realized the role of facilitation is very important. Okay, because this is alternative financing models, right? They are common to some degree in the Western countries, but not common in this part of the world. Okay, take for example something as simple as escrow. All right, escrow services. We are so common. Escrow services is very common in this part of the world, but escrow is not common in the Western financial world. They talk about bond guarantees, okay, which is very different from escrow. Right? So when you want to take money from a company, for example, okay, you say in this part of the world, you say escrow, can I keep the money first, when you perform, then I release? You say no. You pay me first. Alright, and then I put a layer of bond guarantee on it. And then you'll say, why should I pay you first? Right, when you're supposed to raise funds for me? You know? So these are things that we need to understand and educate. Alright? Okay. Alright, so there are various steps of structuring deals. Okay, I won't go into the details. We will make available this information to you. So number one, of course, structuring the deal, identifying the objectives, designing the structure, and the legal and regulatory compliance, very important, right? Because everything must be tracked, everything will flow through the legal system. Very important, because all these are governments are regulated mechanisms. Alright, and then execution, okay, where we secure the financing, documentation, and due diligence. Documentation is also very important because remember, when we say that some of these funds are not collateralized in the beginning, they're actually collateralized by the project. Okay, so the government also have to come in, the project country government also has to come in to provide this kind of support. Okay, And then comes the risk management. So there are various risk management structures that we have to put in place, all right, in order to secure the funds in the project. Monitoring and management, because there's a lot of reporting to the financiers, to the project endorsers, okay, and of course to Federal Reserve, because we are using US government's money, right? And then of course exit strategies are very, very important. Okay, I always when I work with the companies, I always tell them, let's think of how to return the money, okay, to the financiers. Okay, whether is it through earnings, whether is it through sale of assets, or is it through IPO. Okay, just before dinner we had a briefing session by BIDB, and the legal team was telling us it is so much more challenging, all right, to acquire assets in Vietnam versus acquiring the shares. Okay, that actually made me have to rethink some of these policies that we are putting in place. Okay, so with that, I would like to end my sharing session. I hope it inspires you to look at things differently. All right, thank you so much.
Thank you.